If you're self-employed and the bank said no, it's not your income, it's the system. We're going to break down the top 5 reasons why you would utilize a bank statement loan if you're self-employed. Let's get into it. Welcome back to another episode. If you're new to the channel, we'd love the opportunity for you to like and subscribe. It helps keep this little engine moving. And for those of you returning, we really appreciate all of your support, and hopefully you'll get a few nuggets out of today's episode. Coming in at number 5, your write-offs don't work against you. Traditionally, when you're using a conventional loan, you have to provide 1, if not 2 years of your completed filed tax returns, which is often reflecting much lower than what your actual deposits were in your bank account. The bank statement loan uses an expense factor in order to derive what your actual income is that's used for qualifying for your home. Coming in at number 4, that means you qualify for what you actually earn. So for example, we had a client who's averaging $25,000 in deposits on a monthly basis, but his gross adjusted net reflecting on his tax returns after all of his legal deductions taken was $40,000. So if you were to take $40,000 divided out over 12 months, that's just over $3,300 in qualifying income. And at a debt to income ratio of up to 50 or 55% in cases of FHA, that's going to limit you on what you can qualify for versus an average of $25,000 a month, even at a 50% expense factor, meaning that we're going to remove half of that income on the $25,000 deposit. The difference in monthly qualifying income is substantial. Coming in at number 3, the interest rates on bank statement loans are much lower than you think. On average, a bank statement loan is 0.125 to 0.375 higher than the average conventional conforming loan. So if you were to actually take what your income is on your tax returns versus what your income is on your bank statement loan, still utilizing some of the great standard products like a 30-year fix and adjustable rate mortgage, you can also utilize interest-only payments on the bank statement loan. The interest rate is very close and almost catching up to matching what the current conforming conventional limits are in today's market. Coming in at number 2, bank statement loans are built for business owners. If you're looking to purchase your property maybe in an LLC or a corporation, it's typically very difficult to qualify to put that vesting in anything other than individual or maybe a family trust, where the bank statement loan welcomes the opportunity if you want to vest your property in an entity or keep it as individual or put it in a family trust. And coming in at number 1, you can use personal bank statements or business bank statements in order to qualify and derive your income. So what that means is, let's say you're a sole proprietorship and you don't even have a business bank account set up, we can still utilize your most recent 12 or 24 months bank statements and derive what your qualifying income is from a personal bank statement if you do not have a business bank account. So in addition to that, if you have not filed your most recent tax returns depending on where you are in the year, typically, you cannot use any of that income when going with a traditional conventional loan because that income has not been filed to the IRS, whereas the bank statement loan is going to use your actual income that you are currently in over the most recent 12 months. So why that's so powerful is you may have recently started a business and now that business is doing very well, but you have not filed that income yet, so you don't have the ability to use it, where the most recent 12 months bank statements is going to show a true picture of how your business is currently performing, in addition to utilizing the expense factor in order to derive the most income available to qualify for your loan. So on the bank statement loan, you can go as low as a 10% down payment. There is no mortgage insurance if you're putting less than a 20% down payment. So just to recap, the bank statement loan offers as low as a 10% down payment on a primary residence. You can utilize an interest-only payment, an adjustable rate mortgage, a standard fixed program option, personal bank statements, business bank statements, the ability to vest in an entity like an LLC or a corporation, and best part of all, it's going to show you the true picture of what your income actually is for your line of work versus what your tax returns are saying. For more great tips and resources, feel free to head over to scimortgage.com, and if you're curious about if the bank statement loan is a good product for you, we'd welcome the opportunity to connect with us. Feel free to reach out, and until then, remember to let your income work smarter, not harder. We'll see you on the next one.